You think the stock market is open, transparent, visible, every buyer, every seller, all happening in one giant public arena. But that is not the full market. Some of the biggest trades do not happen where you can see them. They move quietly, away from the public exchange, away from the flashing screens, away from the price you think tells the whole story. They move inside dark pools. And if you are a retail investor, you may never know they were there. A dark pool is not a criminal room. It is a private trading venue where large institutions can buy or sell huge blocks of stock without showing the full order to the public market before execution. Think about a pension fund, a hedge fund, an investment bank, a money manager moving millions, sometimes billions of dollars. If they buy a massive amount of stock in the open market, everyone can see the demand. Algorithms may detect the order. The price may move against them before the trade is complete. So Wall Street built another layer, a quieter layer, a darker layer, a place where large orders can be matched away from the public eye. That place is called a dark pool. Imagine an institution wants to buy 10 million shares. If that order appears openly on the exchange, it creates a signal. Other traders may think, someone big knows something. Prices may rise before the buyer finishes the order. So instead of showing everything in public, part of that order can be routed into a dark pool. Inside the dark pool, buyers and sellers can be matched privately. The full size may not be visible before execution. That is the promise of dark pools. Less market impact, more privacy, better execution for large trades, at least in theory. But here is where the story becomes uncomfortable. The same privacy that helps big institutions can also reduce transparency. If more trading happens away from public exchanges, then the market you see may not be the whole market. The public price may look clean. The chart may look simple. The trading app may look transparent, but behind the screen, orders may be moving through hidden venues, broker systems, wholesalers, and dark pools. You see the surface. Wall Street sees the plumbing. Public exchanges are like bright stadiums. The lights are on. Everyone sees the action. Dark pools are more like private rooms under the stadium. The money is real, but most people cannot see what is happening until after the move is done. Dark pools are not automatically bad. If every massive institutional trade was exposed, markets could become unstable. Large investors could get punished simply for being large. But the danger is what happens when too much of the market becomes invisible. Price discovery depends on information. Markets work because buyers and sellers reveal supply, demand, and interest. When more trading happens in the dark, less information reaches the public market, and the price you see may be less complete than you think. That is why dark pools are controversial. Supporters say they reduce trading costs for large institutions. Critics say they make markets less transparent. Supporters say they protect big orders from predatory trading. Critics say they create a two-level market, one level for everyone and another level for institutions. The market you see and the market they use. For retail investors, the impact is not always obvious. You may not see a dark pool fee in your account. You may not see a warning on your trading app. You press buy. The trade fills. The chart moves. Everything looks normal. But the bigger question is this: how much of the real market is happening somewhere you cannot see? Because Wall Street is not only about buying and selling. It is about access, information, speed, routing, liquidity, visibility. Who sees the order? Who knows where liquidity is hiding? Who trades in the light? And who trades in the dark? That is the real power of market structure. Not the headline, not the app, the structure underneath the trade. Dark pools reveal a truth most retail investors never think about. The stock market is not one simple place. It is a network, public exchanges, private venues, brokers, market makers, algorithms, institutions, hidden liquidity, visible prices, invisible orders. Most people only see the final screen, a green button, a chart, a confirmation. But behind that clean interface is a machine. Some players see the surface, others see the system. That is why dark pools matter. The market is not always as visible as it looks. The price is not always the full story. Some of the biggest moves may have already happened in the dark. By the time the public sees the signal, Wall Street may have already moved. This is how money really works behind the scenes.